Godrej Consumer among the top gainers today, up 4% as the first quarter business update indicates strong volume growth. The company also expects revenue to grow in double digits going ahead.
Pharma shares surge over 4% after it bags a redevelopment project in Mumbai with gross development value of 2,100 crore rupees.
Shares of Dabur rally nearly 4% as the first quarter business updates reflects a sequential uptick in demand. The company also expects revenue growth to regain momentum in the coming quarters, even though the previous quarter was impacted by a short summer.
Jubilant FoodWorks' good performance continues in the first quarter. They register 17% growth in consolidated revenue. However, the stock comes in for some profit taking, down 2.5%.
Good updates from a couple of the jewellery players as well. Senco Gold up nearly 5% as it registers revenue growth of 28% in the first quarter. Kalyan Jewellers as well recovers from lows after registering a 30% plus growth in the first quarter, led by near 18% same-store sales growth.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And to kickstart the week, well, we're starting on more or less a flattish note. Remember, waiting by in terms of global cues. What's President Trump going to do next with regard to tariffs? Is there going to be a deal with India, or at least a mini deal that will be officially announced? That's going to be important. And also the Fed minutes is something that we're looking forward to. Hey, Mangalam.
Nigel, even as the frontline indices do reflect this global uncertainty, what's definitely doing well today are the domestic names and the broader markets itself. We have a lot of stocks doing well in that HUL because of the slew of updates that came in over the weekend. All of them suggest one thing, that, demand has definitely recovered. And if the demand has recovered, then who benefits more than the leader of the industry, that is Hindustan Unilever. And mind you, the stock hasn't done much for the last 5 years. So maybe the street is betting on the gains of the recovery to accrue for the industry leader. That explains why HUL is up around 2.5% among the top Nifty gainers in today's trading session. But be that as it may, the frontline index still absolutely flat. Shivangi Sarda of Motilal Oswal Financial Services joins in for a quick technical check on the market. Shivangi, there has been volatility, but it's been range bound. Do you think that continues for the frontline indices? And would you bet more on individual stocks than either the Nifty or Nifty Bank?
Very good morning, Mangalam and Nigel. Thank you for having me. So we've seen a roller coaster ride in Nifty, of course, with support-based buying, but then the pressure at the higher zones is intact. So even though bulls are reinforcing themselves at the support levels, the lack of follow-up at the higher zones is making the index quite lackluster and consolidative. So we're looking at 25,350 as an important support level for the next up move towards 25,750 marks for Nifty. Of course, all the other factors are indicating that, this bullish biasness would continue over here in the indices. Although there is some underperformance in the bank Nifty, we've seen that there has been some very lackluster move from the last 3 trading sessions. And we've seen that the heavyweight banking stocks have actually given up, which is making the entire index dull. Although the smaller banking names and the PSU names are looking quite attractive at these levels. Talking about the index per se, we are going for buy on decline, but of course the conviction in Nifty is more than Bank Nifty. Talking about levels, we are looking at 57,850 as the next upside for Bank Nifty with a support of 56,650 levels.
Okay, all right. By the way, we had some flashes on the screen. I think we should pull that up. I think that's with regard to InfoEdge. They've given their quarterly update and it looks quite good. I was looking at the revenues, the recruitment for solutions. That has registered a good growth of close to around 10%. I think we should get that one up for you on the screen. Q1 billings is up by close to around 11.2%, which is fairly okay. And I think 99 acres for real estate as well has moved to around 94.4 crores. That compares with around 81 crores. While you have recruitment solutions itself, that's around 470 crores, which compares with around 431 crores or thereabouts. So it looks pretty okay. Double-digit growth is what we are seeing in terms of a growth. Shivangi, any view on InfoEdge in terms of how is it looking on the charts, and also fill us in with a fresh couple of calls?
Looking at InfoEdge, Nigel, we've seen that this stock has consolidated from the last 11 weeks. Quite a lot of call writers which are yet to unwind their position. So even though the stock might be up on a month-on-month basis, but overall there is lack of momentum and lackluster here. So I would recommend a wait and watch here. On the other hand, stock-specific ideas, some of the Capital market, exchange-related counters, power names, and IT names are looking quite attractive. But my preferred pick for the day, which will include first up, is CDSL. This one has been one of the strongest in its space. And we've seen that on a month-on-month basis, this has performed and higher top, higher bottom from the last 4 months. Even on the daily basis, we're seeing volumes have added up at the lower levels where the support-based buying was quite strongly seen on Friday's session, which gave a quite great closing on the weekly basis. Even on the weekly basis, we've seen it's trading in an upward sloping channel and, of course, looking quite positive. So recommending a buy here with the next target of 1850 levels with a support of 1750 zones. And the second one would be LTF. This one has also been very strong in consolidation, breakout from the last 8 trading sessions. So looking quite positive for the next target of 218 levels with a support of 203.
All right, take that point, Shivangi. Thanks a lot for that. The sector to be in this morning definitely is the consumer space itself. We've been talking about Nykaa, how they've reported a decent number as well. That stock's moved to the high point of trade right now, and we are seeing continuous traction in names like Dabur. Meanwhile, don't lose sight of Bajaj Consumer. This has been an underperformer in the consumer space, though they've reported a management change 2 weeks ago, and since then the stock has rallied about 35-36%, currently at the high point of day for Bajaj Consumer as well. We'll take a short break on that note, but as we do that, let's get you some good news for our viewers. The mid-cap index has moved into the green, and India's business news leader, CNBC-TV18, is just a click away through the CNBC-TV18 mobile app, which gives you access to breaking news, in-depth articles, and financial world updates, all of them at your fingertips. You can download the app from either the Apple Store or the Google Play Store, or just scan the QR code, which is up for you on the screen. Welcome back. You're watching us here on Chartbusters on CNBC TV18. We've been talking about the auto sales having seen a recovery in the month of June. However, passenger vehicle sales have remained muted. Automakers are also grappling with the issue of non-availability of rare earth magnets, as a result of which the EV space may face some issues in the very near future. Will they or won't they? We have C.S. Vigneshwar, who's the president of the Federal, the Automotive Dealers Association, as we know it as FADA. Thanks a lot for joining in, Mr. Vigneshwar. The obvious question, while passenger vehicles are soft, two-wheelers are doing well. What have you seen in the month of July so far? How have inventory levels been for both passenger and the two-wheelers? And at the same time, what's your view on e-vehicles? Because the rare earth issue could cause some sort of supply chain issues, right?
As far as we got to understand from the manufacturers, I think the rare earth metals will affect ICE as well as EV vehicles, hybrids including. But however, we haven't seen manufacturers stop any vehicle production or tell dealers that they need to stop selling a particular variant of a vehicle as yet. There have been certain variant unavailability issues, but that is much before the issues of rare earth metals and magnets have been there. So we have to watch that. However, it's too early to call July, how the month is going to go. The month of June was quite decent. We've been having positive growth in every sector, whether it's two-wheeler, three-wheeler, commercial vehicles. The commercial equipment has done really well. I mean, they've grown nearly 55% last month. So it's been overall quite decent. Even the passenger vehicle grew by about 2.45%. We wanted to grow much faster. But even the early, during the beginning of this year from FADA, we had predicted that the passenger vehicle segment would be growing in the lower single digits. Most of it is on track. However, we could do without the Trump announced trade wars, or also in terms of the rare earth metal availability. If this happens, probably we need to revise the growth figures lower.
All right. Hi, Mr. Vigneshwar. Good morning, and thanks a lot for joining in. Nigel on this side, we would all wish for a more rational Trump. Hopefully, we'll see signs of that in the coming days. That said, give us a sense in demand. As you said, there's a little bit of a perk up in demand in the month of June. How are you seeing the trends emerging? Rural doing better than urban?
The rural has always been doing well for us in the last couple of years. And that's been the Bharat, which is really driving India. Apart from that, we've also seen that the walk-ins are quite decent. We also checked on the sentiment survey which we have every month with our dealers. It's quite muted. It's a little bit damp. But having said that, we've been having great monsoons. The kharif crop has been great. The stock market has been doing decently well. So when you look at the macroeconomic and anything which contributes, it's been doing decently well. So we're not too scared about it. And we also have seen that government capex expenditure from all whatever signs we have seen is going to go up in the second financial quarter. So things are looking pretty strong for the auto sector, and hope this translates into retails.
All right. And what about commercial vehicles? They have been not so good, even as we've seen some recovery across the board for passenger vehicles, a lot better for two-wheelers. The commercial vehicles usually depend on how the capex cycle is likely to come by. What is your view? How is that likely to do in the latter part of this year?
As I mentioned before, we are seeing signs of the government capex expenditure improve in this current quarter, which is already translated into the the construction equipment has already gone up, really about 55% over last year. This is fantastic. This is really good because these are early signs. Usually the construction equipment goes up when capex is being spent, and then the commercial vehicle goes up next. So this augurs well. And if government capex goes up, there's going to be a good effect on the economy of the overall auto sector.
What about tractors as a segment? We have had a fairly good monsoon. I mean, at least the start has been good, and probability is that we have a decent showing in the monsoon season. What kind of trends are you observing for the tractors?
The tractors been doing well. It's been growing at about 8.08% year on year. In the month of June. But when you take the first 3 months into consideration, the tractor has again grown at about 6.28%, which is great. There's a decent growth. And with the kharif season coming and the monsoons playing a good part, things are only going to improve here. So the rural sector will grow.
Finally, can you give us an updated number on what's the kind of inventory that dealers are sitting on for both two-wheelers and passenger vehicles? How does that compare with earlier?
Yeah, two-wheelers, we are at about a month's inventory in most places. But in the passenger vehicles, that's where the pain is. We are at about 55 days. It's been slowly inching its way a few days a month in the last couple of quarters. We really need to look at this in a more detailed way, because last year it was a disaster. The number of days went up to about 85 days, which was awful for dealer profitability, because it's a complete waste of money in terms of interest. I hope the OEMs are a lot more aware this year, and it doesn't happen again towards the festive season.
And you don't believe that the companies will have to push the channel pipeline, right? Given the sort of growth expectations that the street has, with them sitting on 55 days of inventory already versus 85 days last year, the companies will not be pushing the pipeline much, right?
I hope not. We've been talking to them, we've been liaising with them, and we've been asking them not to do that. It doesn't help anyone. 21 days stock is more than enough. It's an inventory-proved number. 21 days stock is more than enough for giving the customer every option possible.
Appreciate you joining in, sir. Thanks a lot for speaking to us. Looking forward to catching up with you and understanding the trends emerging in the auto sector. Well, remember to tune in to our special offering, the all-new CNBC TV18 Prime. We bring you insights from policy makers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, where commodities, currencies, as well as cryptos are in focus, and Global Lens at 8:30 p.m.
Well, the Nifty has moved slightly into the green. We were talking about HUL before going into break. Just keep an eye out on ITC as well. So if the belief is that consumer sentiment is improving, a lot of these spaces would do a lot better. ITC has moved higher, and we're also seeing some traction in names like Asian Paints. But sticking with the consumer space itself, we also got an update coming in from Dabur, which has actually seen good traction all the way since morning. And this despite the weakness that the company has shown in their beverages portfolio this time around. So if you just look at their first quarter, update, the good part is that demand has recovered. They're seeing sequential recovery with uptick in volume growth. However, the first quarter was impacted on their beverage portfolio on account of unseasonal rains and a shorter summer. That accounts for nearly 10 to 12% of their overall revenue. But the other parts of their business did a lot better. That was home and personal care as well as healthcare, and some of the portfolios plays in healthcare actually showed growth of over 40%. The Honitus portfolio in particular. Consolidated revenue expected to grow in low single digits, but we will see some margin compression. The company believes that's very temporary in nature because of the unseasonal rains. Going forward, because of the improvement that we're seeing in demand sentiment, the subsequent quarters are likely to look a lot stronger. That's the word coming in from the management of Dabur, which is why after underperformance of the last 3 or 4 quarters, the stock has taken this positively, currently sitting at the high point of trade. With that, we'll wrap up on this edition of Chartbusters. Thank you so much for watching. You stay tuned to CNBC TV18 as Trading Hour comes up next.